Hello students. Today I am going to start with a very important chapter, that is final accounts of companies. This chapter is a very important chapter from the examination point of view. Usually you will get section C questions from this chapter. Generally students find this chapter a little difficult, but I will make it very easy and interesting for you. All you have to know in this particular chapter is you should be familiar with the format of statement of profit and loss and the balance sheet. Let me start telling to you about the format of statement of profit and loss in this video. Now, let me explain to you the format of company final accounts as per the revised Schedule 6. As per the revised Schedule 6, the final accounts of a company consists of two basic financial statements. So these two basic financial statements will include number one, statement of profit and loss, and number two, balance sheet. Earlier, some time back, we had the old format, and that old format, it was in horizontal form. We used to call it as the T format, and as per the old format, the final accounts consisted of three parts, namely trading account, profit and loss account, and balance sheet. From the trading account, we'll be finding out the gross profit. Then from the P&L account, we'll be finding out the net profit, and that will be taken to the balance sheet. But this is according to the old format, and this old format should not be followed anymore. Now, we have started following the new format, which involves a number of schedules. So this format involves a number of schedules, and as per this format, we have to prepare the balance sheet in the form of a statement. Okay, the revised schedules came into force from the financial year commencing on or after 1st April 2011. Okay, and as per this revised schedule, the financial statements have to be prepared in vertical format. That is, it should be prepared in the statement form. As I told you already, as per the revised Schedule 6, the final accounts of the company consists of two financial statements. One is the statement of profit and loss. You need not say it as account because in accounts will be having the debit, credit, and all that. Now, as far as this profit and loss statement is concerned, it is not going to be in the form of an account, it is going to be in the form of a statement only. Okay, so we'll be having the statement of profit and loss, and the other financial statement is the balance sheet. For both the statement of profit and loss as well as the balance sheet, we have formats, and we have to strictly follow the format, and according to the format only we have to prepare these statements. First, let me explain to you the statement of profit and loss, the format of the statement of profit and loss. Okay. So, for this, you will be giving the heading as statement of profit and loss for the year ending. Statement of profit and loss for the year ending, whatever year is available, that year you have to mention. Okay, now this statement will have three columns. One column is for particulars, one main column is for particulars, the next column is for note number, and the next column is for amount. Actually speaking, this statement of profit and loss will consist of seven notes. Okay, each and every note will be for a separate heading, and this note is nothing but a working note. For each note number, you will be giving the items which will come under that particular heading. Actually speaking, you will be having from note number 1 to note number 7 in the statement of profit and loss, out of which note number 1 and 2 will be with respect to incomes, and starting from note number 3 to 7 will be having items relating to expenses. Okay, so as I told you already, each note will consist of the items which will come under that particular heading. So you will not show any calculations in the statement of profit and loss. You will be doing all the calculations under each and every note. The final amount only we will bring to the statement of profit and loss. Okay, so before you prepare the statement of profit and loss, you have to prepare each and every note. After finding out the total of each and every note, then only you have to take the total to the main statement of profit and loss. Now, let me explain to you the contents of each and every note which we have here. Before that, let me read the income notes and expenses notes as available in the statement of profit and loss. So we have revenue from operations, that is note number 1, other income, that is note number 2. Then you will have to find out the total revenue, that is nothing but the total of 1 plus 2, note number 1 plus 2. Then you have a number of notes relating to expenses. Under expenses, you have note 3 for cost of goods sold, note 4 for employee benefit expenses, note 5 for finance costs, note 6 for depreciation and amortization expenses, note 7 for other expenses. When you add all these amounts together, that will give you the total of expenses. Okay, then what you have to do is you have to find out the profit before tax, which is nothing but A minus B. So what do you mean by A minus B? A minus B refers to total revenue minus total expenses. That will give you the profit before tax. Then if there is any extraordinary losses like loss on fire or loss due to flood, etc., that has to be deducted. And if there is any provision for taxation as per the problem, even that has to be deducted. And finally, you will arrive at the profit after tax for the year, which will be called as the net profit. So this is what is the format of the statement of profit and loss. Now let me explain to you about the contents of each and every note involved in the statement of profit and loss. So the first note we have here is note 1, which is related to revenue from operations. So this note 1 and note 2, as I told you already, will relate to note with respect to incomes. Okay. The first note we have is note 1, revenue from operations. So what we will have under this note, you have to know. So actually this refers to income earned by the company from its operations. Under this note, note 1, you will be recording all the incomes earned by the company from its operations. In other words, this note will actually include the main source of the company's income. Okay, so whatever is the main source of company's income, whatever income is earned by the company from its main operations, that will come under the heading revenue from operations. This revenue from operations actually will depend upon the nature of the company. That is what I have given here. The nature of income here depends on the nature of the company. As you know very well, the nature of the company will differ from one another. The company may either be a manufacturing or trading company, or it may be a service company, or it may be a financial company. If the company happens to be a manufacturing or trading company, in such case, the main source of income will be gross profit or net sales, as the case may be. So, if you are given the gross profit in the problem, you will be taking the gross profit. If gross profit is available, not available in the problem, you will be taking the net sales. So, what is meant by net sales? You have to know. Net sales is nothing but gross sales minus sales returns. Okay, so you have to take either the gross profit or net sales in case the company happens to be a manufacturing company or a trading company. In case if the company happens to be a service company, then the main source of income will be fees earned. So fees earned will come under note 1. If the company happens to be a financial company, then the main source of income will be interest earned or dividend earned as the case may be. So this will come under note 1 in case if the company happens to be a financial company. So after entering this, the final amount will be taken to the statement of profit and loss account, the statement of profit and loss as revenue from operation note 1. Okay, so this is what will come under note 1 actually. Now let us proceed with note 2, which is for other income. So you have to know what will come under this heading, that is note to other income. Under this heading, any other income other than what is shown under note 1 will come. So under note 1, what will come? I told you the main source of income, that is the income from operations, will come under note 1, isn't it? Apart from the main source of income, apart from the income from operation or revenue from operation, if there is any other income, that will come under note 2. Okay, so these are the incomes which are not directly received from the operations of the business. So those incomes which are not directly received from the operations of the business, they will come under note to other income. Let me give you some examples for other income. So here we have some examples. Under other income, you will be having discount received or discount earned, commission received, interest on investment, interest on fixed deposit, profit on sale of fixed asset, export subsidy, refund on income tax, miscellaneous income, etc. So if you have any of these items in the problem, those items will come under note to other income. You will find out the total of all this, and only that total will be taken to the statement of profit and loss. That's what I've given here. Now find the total. Okay, total of that and take it to the statement of profit and loss. After entering total number 1 and total 2, you have to find out the total of 1 and 2 together, and this will give the total income A. Okay, now let us proceed with the notes relating to expenses. So, as far as the note relating to expenses are concerned, we'll be having from note 3 to note 7 under expenses. So, let us see what is this note 3 now. Note 3 is for cost of goods sold. So, how to find out the cost of goods sold? If cost of goods sold is not given to you directly as such, we'll be finding it out by applying a very simple formula. What is the formula we have here? Cost of goods sold is equal to opening stock plus purchases plus carriage inwards minus closing stock. Let me repeat again. Cost of goods sold is equal to opening stock plus purchases plus carriage inwards minus closing stock. That will give the cost of goods sold, and this will be taken to the statement of profit and loss as note number 3. Now we have note 4. Note 4 is for employee benefit expenses. So, what is note 4? Note 4 is for employee benefit expenses. Under this heading, employee benefit expenses, we'll be having all those expenses which are incurred for the benefit and well being of the employees. For the benefit and welfare of the employees, and it will include the following. Okay, so you will be having wages, salaries, bonus, leave encashment, gratuity paid, transportation expenses, medical expenses, etc. Under this note, that is note 4, employee benefit expenses. And in case if you have any outstanding amount or prepaid amount relating to any of these expenses, any outstanding will be added and any prepaid will be deducted. For example, if you have any wages outstanding, along with the wages already there, add outstanding wages, and if there is any prepaid wages, you have to deduct the prepaid wages. In the same way, if you have any outstanding salaries, it will be added, and if there is any prepaid salaries, that will be deducted. So, after doing all this, find out the total of all these items, and that total will give you the total of note 4, and that total alone will be taken to the statement of profit and loss. As I told you already, in the statement of profit and loss, we will not show any calculations. We'll be showing only the final amounts of each and every note. Now we have note 5, which is for finance costs. So what is note 5? Note 5 is for finance costs. Expenses incurred by the company on its borrowings will come under this note. So, what sort of expenses will come under this note? Under this note, all those expenses incurred by the company on its borrowings will come. Okay. Some examples are interest on overdraft, interest on debentures, interest on term loans, interest on public deposit, interest on bonus or cash credit, discount on issue of debentures written off, etc. Okay, so these are some of the most usual items which will come under note 5 finance costs. Actually, under each and every note, I have given you all possible usual items. It's not that all these items you will get in the problem. Whatever is available, you will have to enter in the note concerned. So, this is what is note 5 finance costs. Now, let us proceed with the next note, that is note 6. Note 6 is for depreciation and amortization expenses. So, what is note 6? It is for depreciation and amortization expenses. As you all know very well, depreciation is applicable to all the fixed assets. You will be having depreciation on land, depreciation on building, depreciation on plant and machinery, depreciation on furniture, and so on. But you may not be familiar with amortization expenses. Actually, amortization applies to all intangible assets like goodwill written off, preliminary expenses written off, etc. So if you have items like goodwill written off or preliminary expenses written off, such items will also come under note 6 under the heading depreciation and amortization expenses. Okay. So usually the following items will come under this note 6, that is depreciation and amortization expenses, depreciation on building, plant and machinery, furniture, etc. Then, as far as amortization expenses are concerned, you'll be having items like goodwill written off, preliminary expenses written off, etc. So then you'll be finding out the total, all the total of all the items coming into note 6, and the total alone will be taken to the statement of profit and loss. Now, let me proceed with the last note which we have in the statement of profit and loss, that is note 7 other expenses. So, what will come under this note 7 other expenses? All other expenses which will not come under the previous headings will come under this note 7. Okay, so actually, starting from note 3, we had a list of expenses, isn't it? Like note 3 is for cost of goods sold, note 4 is for employee benefit expenses, note 5 is for finance costs, note 6 is for depreciation, amortization expenses, is it not? All this we had. Apart from these items of expenses, if there is any other expense, that will come under note 7 other expenses. So let me give you a few examples of the items which will come under the heading other expenses. So you will have expenses like administrative expenses, selling and marketing expenses, carriage outward, telephone expenses, electricity expenses, printing and stationery, rent and rates, sundry expenses, etc. under the heading Other Expenses, which will be regarded as Note 7. Then find the total of all these expenses and that will be taken to the statement of profit and loss under the heading Other Expenses, Note 7. Okay. So now you have to find the total of note 3 to note 7. Okay, from note 3 to note 7, you had a list of expenses, isn't it? So you have to find out the total of notes 3 to note 7. 3 plus 4 plus 5 plus 6 plus 7. Add all these amounts together and this will give the total expenses. Already we found out the total revenue, that is note 1 plus note 2, that was taken as A. Now find out the total of note 3 to note 7 and this will be taken as the total expenses B. Now deduct total B from total A. So what do you mean by this? Now deduct the total expenses from the total revenue and this will give the net profit, not net profit, I'm sorry. This will give the profit before tax. So total revenue minus total expenses will give you what? It will give you the profit before tax. Now let us have a look at the format of the statement of profit and loss. So, as per the statement of profit and loss, after finding out the total of each and every note, you would have entered that in the statement. Note 1 and 2, as I told you already, is notes relating to revenue. Find the total, that will be the total revenue, total A. Then, starting from note 3 to note 7, we have all notes relating to expenses and find the total, that will give you the total of expenses B. Now find the profit before tax, which is nothing but total revenue minus total expenses, that is A minus B. Okay, so here you'll be having the profit before tax. From this, if there is any extraordinary items of expenses like loss on fire or loss due to flood, etc., that you have to enter here. After deducting that, if there is any provision for taxation as per the problem, you have to calculate that also and that will be entered as provision for taxation. The final amount you get is called as profit after tax. That has to be deducted, okay? After deducting this provision for taxation, you'll be getting a final amount and that amount will be called as what? It will be called as the profit after tax for the year and that only will be called as the net profit. Okay, and this net profit will be taken to the balance sheet. So this is how you have to prepare the statement of profit and loss as per the revised schedule 6. You have to memorize the format of the statement of profit and loss because according to the format only you can work out the answer. Hope you are clear with the explanation I gave you today. In my next video, I will be working out a problem involving the preparation of the statement of profit and loss. If you like this video, subscribe to my channel and also share it with your friends. Thank you very much for watching this video.